that next target. Not to mention lumber futures here off the weekly interval would offer objective short trade entry, dollar cost average, get out of your longs on a snap breakdown below this primary neckline off this classic head and shoulder top. Call it 593.52. Went on to hit that first target there for a 5% drop, down to T2 for a 20% crash, down to T3 for a 30% crash, and in all total, the entire trade thus far good for a 34% crash. And I actually had mentioned in my previous video that lumber spot price was really in an extremely bearish posture, and that was back in June, 6 months ago, before the break of this neckline off the classic head and shoulder top here. And here's actually, here is my before photo of what the increased odds of a breakdown would look like in an environment of really drastically rising rates, and that it would be met with a substantial decline in lumber demand. And we snapped it. We snapped that 593.52 price support, coinciding with the previous lows and the primary neckline. We actually had that counter trend rally, snapback rally, and here's the chart right after. Same thing. Had that snapback rally, came back out, back tested, came back out again, back tested one more time. You could re-entered your short trade setup, and got rejected pretty heavily there. Came back out. We actually got rejected right off that 559.10 price resistance 2 times here, and got killed right after that. Sliced right through that T2 support there, bounced right off 415.54 price support again, and got rejected off of resistance and undercut those lows. So anything's possible. We could have a potential snapback rally, but what I can tell you is there's some pretty darn good significant gap support here off the 372.49, and I'll color code that. It's a pretty significant level. I would only suspect a whole lot more ton of downside to come if really taken out. All eyes will be trading right there off that 372.49, as you can tell here. It's some pretty significant support there, going back since the 90s there. So a ton of reactionary highs and lows to help validate that. That'll be a pretty big stretch level there. And if it does go, I would only suspect a really quick wave or a big wave of selling, potentially back to this primary uptrend line off the 2010 reactionary lows there. And that would be your spot time to get back in, especially right off those previous crash lows, off the COVID crash, off the 2015 crash. I would only suspect a pretty nice wave of buying around that key level, call it 304.52 there. So we'll see what happens. I suspect more downside to come, especially with Powell and the Fed starting to jack up interest rates another 50 basis points there in December. So we'll see what happens. I'll keep you updated if you see more significance here in the charts.